how about we just launch straight into it? Perth sale market. Anyone that watches my Perth property updates every 2 to 3 months would have seen some of my graphs before, and I like to keep my own because the stuff that people ever publish is only a tiny snapshot in time. And what's actually important is looking at the trend and how it compares to the past, because if you're only looking at a snapshot, you can say, oh yeah, sales have increased this month, or properties are down compared to last month. What does that mean? It doesn't tell us anything. So what's really notable, and is what kind of inspired me to run this briefing in a way, is that I've started to see some significant indicators showing that we've at least been through the worst of things, and that there's early signs of some of our stats starting to correct. So what I'm specifically looking at here is the number of properties for sale since September 2013. Unfortunately, I didn't keep it any longer than that. It's a discipline that has been running for 3 years out of my 8 of having my agency. But since September 2013, what's most notable here is that over the months leading up to our spring selling season, we've actually had a much more considerable decrease in the number for sale than we have when you look at past years. Some years it's actually increased in the lead up to spring each time. So that is a very positive sign for me, and where that's left us at this current point to November is that we've got 5% less properties on the market than we had in November last year. So that is considerable to note. There's around 1,000 less. So less supply means that things are starting to tighten up, and we always have an influx of properties to hit the market in spring. It's a great time to sell a property if you're ever going to, so everyone prepares their house and gets all their gardens and everything nice, and you can drive down the street and see who's got mulch out, and next week they've got a for sale sign. So that's very notable for me that we're actually got less on the market, and it's the first time that I can say that since a very long time. So it's not to say that I'm launching the fireworks and streamers and getting overly excited, but it's something that we're going to track and keep an eye on over the next few months. In the rest of the stats, when we go deeper, the number of sold have had this gradual trend down this is the average numbers sold per week, trending down since back here. And until we see this starting to trend back up, like this is the other half of the equation. This is the demand side. We've just spoken about supply, but if our demand doesn't increases or start turning around, then that's when I'll be really proclaiming that we've hit the bottom and we're coming back up. So we're very close to it, but we're not there yet. You can see it going up and down, and I would have expected a higher number of sales for November because it's usually quite a peak month. So you can see there last year leading up, and then November being the peak of sales for that year, for very much that latter half of the year. So mixed kind of results still, but we need to keep an eye on the numbers being sold and the demand and see if that increases too. So you can see that it's actually down on 6 months ago and down on a year ago. I think part of the supply equation of why we've got less is that people are being a lot more realistic and putting their plans on hold and waiting. So there's probably both pent-up supply and demand. People would sell their house and buy if they knew that they could get their price. So we've just got to keep a good eye on it. This is another stat that is definitely positive for us in the last quarter, and the days on market. We were getting up super high at 71 days back at the start of the year, back at mid last year, and we have started to have a minor trend back the other way, and we're now at 64 days, average selling days. So that's another one that we'll have to keep a strong eye on to see if it continues down. Ultimately, if that is going down, if the supply is going down and the demand of sold is then peaks up, then I'll be proclaiming that we've definitely turned. But it can take some time to do that. So the median house price, this is a trailing indicator, and I don't place anywhere near as much importance on this compared to the other three, because it's very hard to tell at the top level as well when we're looking at the whole. It's a Perth median, so it's just half the homes are selling above, half the homes are selling below. And we can see that steady decrease, and it's showing up a lot more in that median price now, significantly dropping over that last quarter to 512. So the other stats will change first, and then this will show it and lag. So I don't place as much importance on this one. Now, on a slightly more positive note, over this last year, we've had some significant change in median house prices, and I've actually gone through and bolded the ones that are all a similar type of area, and they're all the aspirational areas that people are taking that opportunity to upgrade to. So you can see the Applecrosses, the Swanbournes, these are not cheap median prices, and it's really interesting to see that. And I suspect it's many people my age that are still on reasonable incomes that are actually saying, hey, that's looking pretty affordable now. Let's get into that very, very decent suburb and make the move. And that's really been the story of this last year. It's the story of the upgraders taking the opportunity. And for me, that's pretty positive that they're making moves. And hand on chest, I couldn't have predicted that, and anyone that could, would be doing pretty well. So, the changes in some of these areas is quite decent. But then when you look through to some of the ones that are unbolded, these have been a bit more of the steady performers. South Guildford's done particularly well over the last 5 years, and Bentley continues to do well over the last 5 years too. So I looked also at the top suburbs that have performed best over the 5 years, because that gives you a bit more of a longer snapshot on things. And this column here is the 5-year average annual growth. And you can see when you go through each of them that there's actually a core reason that they've performed. And Rossmoyne, for instance, is propped up by the school very well there. Willetton is in, again, very desirable for families for the school. When you look through Bentley with its catchment in the uni, Coolbellup had a rezoning of the whole suburb that just drove that bonkers. And each of these, we've got some steadier performers like the Langford and the East Cannington that are appearing relatively close to Perth, and also popular with both investors and home buyers. So it's great to see that this is more of a consistent growth that these areas have been getting. So, you'd kind of think over the last 5 years it's been pretty doom and gloom, but anyone that's owned properties in these areas has done quite well. Now, the biggest losers for houses. I tried to find a common point between all of these suburbs, and I couldn't. In many cases, they've overshot where their value should have been, and they're correcting. In other cases, they've just become too expensive, and then the attention has moved to the neighbouring areas. And that's why later when I look at my suburbs to predict, I'm very much looking at where it has performed over the last 1, 2, 3 years, and then I look to the suburbs around it as to whether they've gained yet. And through the ripple effect, that demand moves out and around and that's how one of the very main things that I look at when predicting areas. So no major commonalities between these, but you can see areas like Medina at the low end, Perth in its CBD has been affected, and then there's a whole mixture of prices here. So as I say, we can't say the low end's been hurt more than the top end when it comes to houses. It's kind of mixed and all over. I should mention that at the end of each of my sections, I'll see if there's any questions before we wrap up and move to the next one. And if I can answer it, I will. And if it's more specific to you, we can always cover it off later. All right. So here, going into units now, the median price for units has kind of shot back up. With units, I don't pay as much attention to median price because we've got a lot of newer apartments coming into areas that are raising the price point, so it doesn't make as much sense to look at median price because it distorts it. But there are certainly suburbs within this list that have done genuinely well when you look at the established stock that's in the suburbs, and the top of that list is Bayswater, which I can 100% vouch for. We have clients that own properties in there, and we've been doing appraisals and seeing, firsthand that it's not quite to this extent, but they've definitely received a 10 to 15% gain over the last 12 to 18 months. So when we also look down the list, you can see that these are all quite aspirational lifestyle areas that people are making the move into, and in those lifestyle areas is where apartments are still doing, well. You can see the Vic Parks, you can see the Burswoods, the Apple Crosses, the Atterdale. Bayswater has benefited because Maylands shot up initially, and then now this is relative, value, and that's why it's kind of jumped back again. So, looking at the biggest winners for the last 5 years, we can see that areas like Fremantle, you can see Maylands, as I mentioned, has done very well over that period. And then we've got North Perth, Vic Park, Kewdale. So they're all kind of very solid areas with some kind of lifestyle appeal. I don't know about Shoalwater, but someone must find a reason for living down there. Now, this is what I found particularly interesting. With the houses, I couldn't find any major trend for why they lost big time. But with the units, the trend was very evident, and the biggest losers are very much focused around the bottom end of our market. And you can see that Armidale tops that list at 24%, and I can 100% vouch for that figure being very real. Likewise with Logan's laughing. Not laughing, but relating, shall I say. West Leederville, I think that's more of a case of, more stock coming on the market and newer stock that's just more attractively priced. I think that's more of a distorted one. So that area of success has not been doing well. I can attribute to that. Melville is areas like Midland and Midvale. They've really been hurting as well. They're down the bottom end. And then we've got our favourite here, Rockingham, that is down by Shoalwater and has not done well. And then we've got some oversupply issues in places like Cloverdale for apartments. And then when we look at other areas that have kept a stigma like Girraween, I really got worried about having to go through there because you might not come out. And Cockburn Central, has anyone been down to Cockburn? When you go down there, it's a massive level of apartments that they've just dumped in there. So there's going to be some time before things really, refine themselves, and I expect this trend to continue. they are expanding the shopping centre and doing a whole bunch of things, but it's going to take some time to catch up. So now going into the Perth rental market. Oh, my favourite. The number of properties for rent, which is again particularly exciting for me, has turned back in the July quarter, and the trend has been continually down to this month. And normally we'd see that number coming up for as it has done for each of these other spring periods. So it's actually very notable that it's continued to come down even through spring when we'd have that extra stock coming on. So that will certainly start to give more confidence to investors, and as they start to come back to the market too, they will add to the demand side of our equation that we spoke of earlier when we look at house prices. And the most important thing that I'm looking to see add to that demand is the investors from our over east. They've pretty much just run for cover and put their money into other states for the last 5 years, and I know many buyers agents over there. One of the great parts about me travelling and speaking is I get to meet lots of other real estate agents, and so I keep in contact with them, and they're starting to reach out to me and saying, Jarrad, we're starting to look at Perth, we're starting to think of Perth, its relative value is there, the yield is there. So where is going to be mainly hot over the next 12 to 18 months will be Brisbane and Queensland, and that's starting to pick up pace. And then once everyone's made their money from there, that's when it'll be flowing over to here in buckets. So that will add to our demand and start to also see pressure on price increases. So this is, for anyone that actually owns an investment property now, this is the first, decently positive news in a while. So that, as far as the number for rent is a leading indicator, and it's the one that I play most attention to. The rental vacancy rate is a broader summary again of where things are at as a whole, not looking down at the individual suburbs. And you can see that our vacancy rate, just when we might have thought it was stabilising, just got hammered in the last 3 months, and that's really showing up where we've known it to be for quite some time. So that's up at 6.7% now. And keeping in mind that the long-term average for a reasonable rental market is 3%, we're double that. And when I travel around Australia, other agents are like, how can you handle 6.7%? And that's why I get invited to speak everywhere, because it's like going to, we've really had to double and triple our efforts just to handle it and to still lease properties in 3 to 4 weeks of going to market. So I don't pay as much attention to that, other than to note that things are still, you need to be very vigilant on doing everything right to find a tenant quickly, and providing we market it well, price it well, and show it after hours and weekends, and have someone dedicated and focused on that, then it's not a problem finding tenants. The median rent is similar to the vacancy, in that we've seen that continual decline from our $480 per week back here at its peak, and my business value has seen its similar decline in rent. And Lauren's shaking her head because she receives, my managers all get paid a percentage of their portfolio's fees, so she's seen a decline in her salary too. Thank you for sharing that with me. It has really been difficult, and I feel for all of our landlords that have been through it. But what I'm hopeful of seeing is that if this continues to pull back the other way with the number, then these two trailing indicators will start to follow. Need to see that, so that's why I think it's too early to say that we've definitely reached the bottom, but we're nearing I feel that we're nearing it.
Jarrad, how much does that take into consideration property types for rent?
Well, it doesn't. That's just looking at the overall of Perth. I'll touch on areas, which I think is next slide.
I mean areas I meant like 3x1s, 4x1s,
Yeah.
4x2s.
So as the markets become tougher, tenants have become even more fussy. So if it doesn't have a garage to enclose a car, if it doesn't have air conditioning now that we're in summer, just don't even bother advertising it for rent. You need an air conditioner. Back in the day, you could, find a tenant that's willing to put up with a fan, but not now. It's really about the features of the property, and don't get me wrong, if you price anything right, you can rent it, but to who you're renting it to is also a big consideration. So that's why everything that I focus on is about long-term holding of more decent property. And if you are going to buy an older property, add value to it in the upfront. More on that later. So, median house rent by region. Yes, this was particularly interesting table. I ranked it by worst hit in rent reduction in rental price. No one actually provides data down to the suburb level, so the best that I could find was by the region. And you can see that Armidale again has just been smashed on its rental price. I put the example suburbs here so you can see some of the suburbs that are in each. Far north, with Butler, Two Rocks and Yanchep, they've been equally smashed. And then we look at Midland, Midvale's doing tough. And you can see down the other end, we've got these middle class suburbs, which is very much a part of my strategy, Marangaroo, Madaleys, Lansdales, that have all held up far better than the majority, and they've only had a reduction by 2.4%, which is very negligible. Some of these other areas here are a bit more higher end, City Beach, Claremont. And then we've got some of these real stable suburbs like Bentley, Cannington, Riverton that have held on much better than the bottom end. So bottom end has been most affected by rental drops. And that was houses. This is units. It's a very quite a similar story for units in that the Midland Midvale tops the cake there with 15% drop, and then we've got other areas like Armidale and Rockingham Way. Interestingly, I found that very interesting that Highgate, Mount Hawthorn and Mount Lawley have seen such a high drop. You wouldn't. I've been trying to understand that and justify it, but if you come up with something, let me know.
Because they're quite old.
Yeah, it's a good point, Nick, that I think there's a lot of more higher density stock coming on that is lowering the price with 1x1s and other stuff, and a lot of the stock that is in there that is established is very old, and a lot of it needs renovating, so it's kind of fallen out of favour and been left behind. No aircon, yep. No garage locky car. Yeah. Oh, you guys are great. Helping me. So, one of the big things that I spend a lot of time looking at is timing, because it's very difficult to get right. I don't want to be wrong and not buy anything and miss out entirely when it starts to turn. So my advice is always around take steps when you can and use a formula to insulate you, which I'll go through in a minute. But where we're at, and you can look at areas around Australia as if they're on a clock. So we've got the peak of the market at 12 o'clock. You start to decline. You're in a declining market where we were at for 2 to 3 years. We then move to approaching the bottom, which is where we're currently put at by, and I follow Hare and Todd White of all the data providers when it comes to timing around Australia. the most notable thing, which is very interesting, is that our southwest of WA has actually, by their classification, moved to the bottom of the market. And the deeper and deeper that I've looked into this, I wouldn't encourage investing in the southwest longer term because it's not a stable, predictable, ongoing return that you will get. But it clearly shows that a lot of people have been seeing value down there and moving into that market and buying that holiday place. It must be the same ones that are upgrading into these, decent areas. When you have money, you have it, and areas like Bunbury and Busselton and have seen high digit growth. Some of them in double-digit growth over the last year. So that's why they've classified it there. And when we look at units, well, just relating back to what I said earlier, up here you can see Gold Coast, Ipswich, Brisbane. They're saying that they're approaching their peak and getting up there. And Gold Coast, Ipswich approaching peak, and Brisbane start of recovery. So as they move around, investors very much move their money around to us as it flows through. The units, what I found very interesting on the units, and I definitely agree with this, is that they're trailing the housing market side, and Herentons White are still putting them in a declining market, and that's why I'm not as favourable on units at the moment. And later, when I do my predictions, I'm not actually going to list any suburbs for units because with the newer unit supply still coming into these areas and really shaking them up, it's very difficult to predict with any reliance. And with the unit market trailing the housing market, I feel that there's more time for us to sit back and see where it's all going to come together and land. And if I was going to be making any moves in this market over the next 12 to 18 months, it would be in houses, and that's very much my view at the moment. It's not to say go out and sell your unit tomorrow. I know Logan would love to sell a property, but he's certainly going to advise you to hold on to it and bed down for when things do turn. I really found I like to compare us and track our progress relative to Sydney because we very much move through our cycles at a counter time. And it's nice to get some perspective on where we're now at, because when we're down in the woods, we can't see how we are relative to the other capitals in Australia. And you can see back from 2004 to 2008, everyone in Sydney was in the same place that we're at now. They were incredibly fearful. They thought that Australia had forgotten them for any kind of price growth and movement, and that was our mining boom period. And we were living high on the hog over here with massive increase over that period. They didn't see any of it, and then things suddenly switched for them post GFC once we recovered and refound their feet. And since the GFC, they've gone from 540 median price up to $1,068,000. It's massive, a 97% increase over the last 8 years. So if we were following the cycles, and now that I've been through it, you can start to make a more informed decision. And when you look at Perth's relative value, we've gone from 460 to 512, which is only 11%. So that's why people are starting to see us as being the next to turn. And there's a lot of people in Sydney that have made very good money that when they start investing over here, they can pour all that equity and value that they've made into our market. So I found that very interesting, and it's good to keep an eye on where we're at with our different cycles.